Not sure if your firm qualifies for the research and development, the R&D tax credit? If you devote resources to innovation initiatives and you have yet to determine your firm's eligibility, it's very likely that you're still sitting on one of the most vital sources of tax savings that your firm will ever meet. Outlined in Section 41 of the Internal Revenue Code, you will find the rules and regulations of the R&D credit. Like I said, it's in Section 41 of the Internal Revenue Code. Who has time for that? So for that reason, I created this video, a 6-minute crash course that will give you information and just enough to help you quickly familiarize yourself with what it is you actually need to know and to avoid all that accounting jargon. So let's dive in. Created to stimulate the economy, boost international competitiveness, and increase research on U.S. soil, Ronald Reagan's administration passed the R&D tax credit in 1981. However, at that time and until recently, it was a year-to-year pass, meaning it had to be renewed every year. It was something that expired. Fast forward to 2015, and Congress passed what we know as the PATH Act, and that allowed the R&D credits to be a permanent feature on the tax code. In the past, one of the main limitations on the use of the credit was the AMT, the Alternative Minimum Tax, which required companies to pay a minimum federal tax rate no matter how significant a company's R&D tax credit was. This created hesitation for the firm's taxpayers, and discovering their R&D credit no longer seemed worth their time and efforts. With the passing of the PATH Act of 2015, eligible small businesses were now able to use their credits to offset their AMT starting in 2016, which was fantastic news. So the next question I'm sure you have for me, does my firm qualify, Beth? And if so, how do I know? It's a great next question. The IRS did create an easy 4-part test for us to quickly go through and figure out if your activities do in fact qualify. So let's get into those. Number 1, you must be attempting to do something new or improved. You don't necessarily have to discover an innovation or advancement that's new to your industry. Only what may be innovative or new to you and your company's processes or products. Number 2, it must be technological in nature. It must rely on hard sciences like physics, engineering, computer science, or chemistry. Number 3, you must demonstrate that you've attempted to eliminate uncertainty about the development or improvement of a product or process. In other words, something that has been changed solely for aesthetic purposes would not qualify. And finally, number 4, it must be using a process of experimentation to determine the best way forward, involving methods like modeling, simulation, trial and error, and prototyping. Now that we have identified what the 4-part test is, let's move over into how exactly are those qualifying projects going to be monetized into credits. And that is a great topic. There are 3 types of eligible expenses that you will be looking for, and that's going to be contracted research, supplies, and the majority of it is going to be employee salaries. Now, bear in mind that your eligible expenses may be less than your cash outlay. So what I mean by that is, if your employees only spend half of their time on a qualifying project, then only half of their salary is going to be included in that qualified expense. Unfortunately, common misconceptions often prevent business owners from claiming R&D tax credits. One of the main misconceptions is that credits are available for specific industries, when all industries are, in fact, eligible. Any taxpayer may qualify, whether you are a startup, sole proprietorship, a C Corp, an S Corp, or a large corporation. Another huge incentive and driving force to discovering your credits is that the IRS allows companies to look back 3 years in addition to their current filing year and receive R&D credits. Some also believe R&D tax credits are only relevant for profit-making enterprises, even though they can be carried forward for 20 years or can potentially be used against payroll tax liabilities. And then, of course, we always come across the ones who dread the efforts involved in claiming the R&D tax credit, and that is a valid concern. However, in our experience, Every time we get into the record keeping and the documentation in the firm system, you already have more than enough. It's buttoned up and sufficient for us. So in short, nobody wants to pay Uncle Sam more than they already have to. And the R&D credit is one of the most lucrative credits that your firm will ever come across. I guarantee that. It is a dollar for dollar reduction in your tax liability. So I highly encourage you, if you haven't already, look into it. Give us a call. We are a team here at CTA made up of highly knowledgeable and skilled CPAs, enrolled agents, professional engineers, accountants, and consultants, and we care. So thank you so much for taking the time out of your day and watching this video. If you know anyone who could benefit from watching this, go ahead and pass it on. I'd greatly appreciate it. And like I said, reach out. My name is Beth Graham, and until we talk again, stay well and stay healthy, and thank you so much.